Hey everybody, it's John Rodriguez with Loan Mortgage. Want to talk to you about down payment assistance loans and how that can help out for you guys and break it down for you guys. So, I want to talk about the three main types. Okay. The first one is going to be a grant, and those are the best. Okay. Because you don't have to pay those back. It's free money, a little more difficult to qualify for, but those are typically the best. Okay. The second one is going to be a repayable loan. Now, those are where you have a second mortgage, and then that second mortgage is used to cover the down payment or cost or both. And you have monthly payments for that. Usually they give it to you around 1 to 2% higher than your first mortgage, and they amortize it over 10 years. Okay. The third is the forgivable loans. Okay. Now, those are pretty good too, because after a set amount of time, you don't have to pay them back, don't have any monthly payments. They just have some requirements where they want you to live in the property for 3 or 5 years, sometimes 10. And then they're all different. Then you don't have to pay it back. All right. Now, sometimes with those forgivables, they're also maybe repayable, but deferred and forgivable, where you have what's called a silent second mortgage, don't have any payments on it, and they get their money back when you go to do a cash out refinance or you sell the property. Okay. Now, what can this money be used for? Now, the money on all three of these can be either used for down payment, closing costs, or one or the other, or sometimes neither. Sometimes they're just going to let you get extra down payment funds on top of your down payment to lower your monthly mortgage payment. Okay. And sometimes they also have restrictions on what cost they can be used for. Sometimes they only want you to use it for discount points and standard lender fees and standard title fees. Sometimes they don't want to use for charges that the bank wants to charge because they have access to this program, which some banks do, right? So that's what the funds can be used for. You can't really get the money back. So a lot of people ask, okay, well, if my down payment is 3% and I'm getting a 5% assistance, can I keep the 2% for myself? No, no, they in the 99.9% of these programs, they did not let you get that money back in your pocket. Okay. Now, what is associated with these programs? Because there are extra costs. So we do have extra costs associated. The banks will charge typically a processing fee for this. Title company will charge a second lien reporting fee. Sometimes you'll have a nonprofit organization involved where they're going to charge a fee, right? Typically, these fees can range anywhere from $700 up to maybe 0.5% in addition to the loan amount. Okay. Eligibility. Who is eligible for these loans? Most of the time, now this isn't for everything, but most of the time you have to be a first time home buyer and be under an income threshold limit to be able to get these loans. Okay. But not in all cases. And just so you know, a first time home buyer doesn't necessarily mean the first time you ever bought a home. It just means that you don't have ownership in a property for the last 3 years. Okay. So if you haven't been on title for a property or ownership of a property for the last 3 years, then you can also qualify as a first time home buyer. That's really important to know. Okay. Now, of course, these loans are not for investors and, vacation homes or anything like that. They're just for people who are going to live in the home. Now, what are the other restrictions that come with these loans as far as the future holds for you? Now, some of these must be repaid. Now, that falls under the repayable loans, okay? Or a deferred loan. You repay it when you either do a refinance or when you sell the property or over the term. And usually they'll give you about 10 years or 20 years to pay that back. By the way, the repayment comes out of the equity of the property or from your own pocket, however you want when you go to repay it. Now, what if you don't have the equity to repay it and you want to keep it deferred? Okay. What they'll typically do in these cases, because they hold second lien position on the property, these down payment assistance programs, the entities will say, well, if we're going to let you refinance your home, we want to make sure that it's in your benefit. So we want to see that you're going to at least save, for example, 1% on your interest rate or $100 on your monthly payment. And they'll review that and they'll say, okay, we'll let you refinance. So just keep in mind there are restrictions. I've had people get down payment assistance loans in the like $20,000 range where, it was just to lower their monthly payment. It wasn't even to cover their costs or anything. And then 5 years later, they're coming back and they're asking me to do a refinance because they got denied somewhere else. Well, the reason why they got denied wasn't because they got denied from the bank. It was because the actual down payment assistance holder did not let them refinance because the borrowers were there to maybe pull out 50,000 or 30,000 out of their home to consolidate a bunch of credit cards that they owed. But the down payment assistance said, no, no, no. We're not going to let you consolidate. You have to pay us back first before we're going to let you refinance and consolidate your other credit cards. So be wary. Although these down payment assistance programs are very helpful, they're very good for a lot of people. In some cases, they may not work for you. So you really have to plan your path forward on how you want to move forward with that. Well, that's it for the video. I really appreciate you watching the video. Please like, subscribe, share. It really helps me grow the channel. Again, I do appreciate it. Thank you so much for watching the video. Have a great day.